Well, that's a great question. I think two things. One is that the Treasury yields at the moment is a little soft, 1.4% or just above 1.4%. But ultimately, as the U.S. economy continues to recover, inflation, whether it reverts back to normal or not, I do think that Treasury yield is going to grind higher over the course of next 12 to 18 months, which means duration risk is going to be important. We need to stay short duration in fixed income. Think about some of the high yield assets. I think it's still a favorable environment for equities. And you're right in a sense that some companies, especially in manufacturing, are facing cost pressure. There are other of those who can pass those on to consumers. So as we run into the next quarterly earnings season, I think it's really important to think about which are the companies that have the pricing power, as you rightly pointed out, and those are price takers who obviously could see a bit more of a margin compression. But so far, I think we've seen margin expansion as the economy improves. So I think the costs concerns are now overcome or offset by stronger business results. And that to me is good news for equities.
Okay. Good news for equities on that front overall. I mean, what do you make, though, of what's some of the supply disruptions that could happen on an ongoing basis out here in Asia because of new COVID flare-ups? And I mean, we've been speaking to our colleague Arjun in Guangzhou about this very issue, and many have highlighted concerns around shipping and ports tied to new COVID cases. And this, yes, may be another transitory factor, but do you think markets have accurately priced in the impacts?
I think not for the time being. I think not only in Guangdong province, the latest outbreak, but also, for example, in Taiwan, where we do have a number of cases in chip manufacturers. So I think there are a number of, again, one-off events that could add to the inflationary pressure and supply side bottlenecks that everyone's talking about. Not to mention the containers being in the wrong places at the wrong time. All of that, I think, is going to create quite a big challenge for global supply chains. I don't think the market is fully pricing that in yet because it's quite difficult to work out exactly the impact. But I do agree with you that I think in Asia, the good news is that most countries are starting to get their COVID situation under control. But the risks, not just for Asia, but for globally, whether these variants could potentially lead to a fresh wave of pandemic despite a really encouraging signs of vaccinations, especially in the US, in the UK, increasingly in Europe. And Asia is starting to pick up as well. So the good news is that vaccines are now being applied, but the uncertainties of how the pandemic will evolve over time, that ought to be part of investors' asset allocation consideration.